Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, October 5th, 2021. I wanted to get this one out early and show you some of the developments I'm looking at here. And we're going to look at primarily two time frames on the major stock indexes. I'm going to start out here with the futures, but then I want to focus on the 60-minute charts and the weekly charts. I'm going to kind of bypass the dailies and show you what stands out on the market and the market leading FAANG stocks. Before we get into the QQQ and SPY, let me just start out here with S&P 500 E-mini futures. We're looking at 120-minute candles, 2-hour chart, so 6 months of price history. Market's been on a sell signal since really back here. We took out trend lines on the 60-minute chart. Remember, we're looking at the 120-minute chart. And then we took out this larger trend line, which goes back to the left of the chart here. Breakdown back test. And it's been a healthy correction so far, biggest one in a while. Positive divergences still in place. And so when we look out at both the 60-minute and 120-minute charts, I have across the board positive divergences on the indexes, and that's the major ones, SPY and QQQ, as well as all the market leading FAANG stocks. I'm going to go over those in this video as well. So, I said it the other day, and although the buyers have not stepped in, they've had a few false starts, it is still the most, bar none, bullish setup that we've seen in a while on the shorter term time frame. So it may play out, may not. If it does, will it play out for a move to new highs? Well, that's why I'm going to show you the weekly charts and let you make that decision. But there it is. There's those divergences still intact. Now, the thing is, we haven't hit my the next targets, which are QQQ. There's different targets on different time frames, of course, but on QQQ I have that T3. On ES, this isn't a hard target, but it's where I think we're going, 42.20. And let me expand on that when I say where I think we're going. At this point in time, although there's no certainties, that's just a given at any point in time. I don't think anybody out there is arrogant enough to say the market must do this, must do that. But it's a matter of how do we get there? When do we get there? Do we get there this week with just more selling? We're in a pretty impulsive downtrend now. Or do these divergences play out? And that's most certainly a possibility. And then we see that level, let's say, whether it's next week or a few weeks from now. But I still think we're going to come back in and test the 200-day moving averages. We've got quite a few sell signals on the daily chart. But again, I'm going to show you some things on the weekly chart that might delay more downside. And then again, I'll let you decide. And well, today should be very telling, in my opinion, if we can rally through and start to get some upside momentum, and we might. So I'll have to, go over all these levels and let you decide on what to do here. So NQ, NASDAQ 100, we have hit that 14,434 support. I have that number at 14,434.75 rounded up. NQ's trading quarter point increments, so that would be the closest number. And we hit it yesterday, and we're above it. So based on these divergences and the fact that now we're holding that support, we had a slight overshoot. I've reversed. I reversed right before this video. I made that decision, and that's why I wanted to get the video out to you guys and let you decide what you want to do. And I will go back short if we can take it out and move down. But as of now, these divergences are just too strong to ignore, and they're on every market leading stock. They're on the indexes, and we haven't had them in a while. So they could play out for quite a bit. Usually 60-minute divergences play out for at least what I call a tradable rally, or a swing tradable rally. A rally that's going to last more than just a few hours, and quite often more than a couple days. That could be, could be a couple weeks, could be more. We'll see. And it's pretty simple. That's the way I look at it. Look, the lows aren't that far off. So if we take them out, we will most likely then go on down, and we still may have divergences if we hit that target, but we don't have to get down there, and that's the next target. I'm sorry, that's 14.0, we'll round it off, 14.50, 14.052, somewhere around there. Bounce targets, more apt to just trail up when you get these divergent lows and see where it goes. But, the same levels that were support on the way down become resistance on the way up. Big one being right here, about 1530. And again, when I get to the weekly charts, it'll kind of hopefully help paint the picture more of where I'm thinking right now, what may happen. And that may determine what happens over the next few weeks or even more. So there it is. We didn't hit the T3 yet, which would have correlated with this target here. However, we already hit T2 here, and that's an intermediate support level. I didn't list it as a target, but it's certainly support. So that's NQ. That's also the 2-hour candles right there. There's your divergences. Now let's move on and keep it pretty simple and just look at the 60-minute charts of QQQ and the market-leading FAANG stocks. It's a daily chart there. You can see the breakdown, impulsive selling, break of that 360 support. And again, we're in a thin zone, so there is still a very good chance that we could come down here and hit that final target. T3 is right around here, roughly at that 342.50-ish level. And those 200-day moving averages there, you can see it on the 60-minute chart. The actual support's about, again, rounded off about 342.50. So I have a third target around 343. I'll still maintain for now because by the time this video's over, I may be short again. Very well, depending on what I see. All right, but if we do bounce, where are some potential bounce targets? There's a beautiful trend line right there, and there is that 369.50, which was T1. There you got a gap there. There's a lot to like about shorting or taking profits if we get a rally up to that level. So this is how, and this trade may still very well pan out. This is a micro. I mentioned I reversed it right here and took it up to right there. Said that would be my maximum bounce target. Maybe, hopefully, some of you took it up to there, and then predicted we would do this, and we still may. When I draw arrows, I don't always add all them what I call micro squiggles. And so right now I'm looking at a potential micro squiggle, meaning a tradable bounce up to that trend line, maybe overshoot it a hair. So I would say about 360.50. Big resistance, probably almost certainly get a reaction even if we're going much higher. And so for a swing trade, you're talking, if you get up there, that'd be about a 4. Anywhere from the trend line would be about 4%, and up to about that 369.50 would be 4.7, rough, almost 5 really. And I just grabbed from where we opened today. All right, so those are the levels. These are the divergences that are still very much intact. We have another bullish crossover, and again, so for those reasons, and the fact that we did hit, or we came very close. I have a support level here at about 349, 350, and we almost hit that as well. But again, I look at all the charts, SPY, ES, QQQ, and all you have to do is hit one of them. And if the buyers are stepping in, buying that level, that support level, then that's where we're going to go. Okay, so now we're just going to rifle through the FAANGs, and here's a common theme. These are the market leading stocks, not just because there's bullish sentiment, a lot of people own them, they're widely held, but it's mathematical. It's very simple. They have the highest weighting in the S&P 500 and the NASDAQ 100, and hence, if they rally, the market rallies. And that's why the market made it to new highs with the vast majority of stocks falling in recent months. Hence, all that, those videos I did on the deteriorating market breadth, showing you more and more stocks, more and more stocks were falling or trading down below their 200-day and 50-day moving averages. Whereas just a few, namely, these guys and some others, were doing all the heavy lifting because they have a higher weighting in the indexes. So here it is. So let's just now talk simple charts. This is, again, bar none, without even a close second, the most bullish setup on the 60-minute time frame. There's an asterisk there to be had for sure on the 60-minute time frame, because not on the daily, not on the weekly. And so I often say that the longer term charts tend to override the short term charts, particularly from a longer term point of view. So if your head's spinning what I'm talking about, if this is where I think Apple's going, you want to trend trade, or you're not an active trader, then you short here and then you cover here. If you're an active trader, I can be right on that macro call, and then there's these micro calls in here, and so right now that's what I'm looking at, a micro call. Now, As I said, fewer things are more bearish in a failed bullish setup. So whether it fails to even break out above the trend line or it does, this, let me redo it, that is a bullish falling wedge pattern on the 60-minute chart, confirmed with positive divergence. And it's just impossible for me to ignore this when you're in a bullish trend. So breakout would be, remember that was a break of support. It was a level I was watching, a key level, 140, 159. We broke it. We're still below it. So this is not by any means an all-in moment. Or depending again who you are, if you're short the market, you think there's more downside, you have swing positions or trend positions, you're not an active trader, you're profitable on the shorts, you can give it some room and consider maybe a stop up in here, especially on a daily closing basis, so they don't just pop it. Sometimes, all eyes are watching a certain level and they pop it and then you get a false breakout. But if we clearly take that out, that's hard to say it's anything but bullish. So there it is. And another bounce target would be, there's a good level right here, about 147.16. So bottom line, these are your levels to watch on Apple. We have divergences, which is a bullish setup, no buy signal, but it's pretty compelling, and Apple just hit support there. You see my line, it's tuned down a little bit, but that's about 138, and Apple just hit that. So there's Apple. And if Apple rallies, takes out the trend line, at minimum target there is about another 5+% from where we're at, up to about 147.16. So check. Negative divergence, right? At the high right here, that was this divergence line continued on. Divergent high, right? And divergent low. And these are the intermediate time frames. So that's it. So no buy signal. So again, it's not an all-in, and it doesn't negate the bearish scenario. Quite often, I'll tell you very often, in a bull trend, negative divergences, bearish patterns set up, and they don't play out for much more than just a minor pullback before the dip buyers step in. In a bear trend, you can have bullish setups and positive divergences, and they fail to materialize, or they do break out, and then they get sold into rather quickly. So as of now, this is just what I'm leaning towards. And again, you trade it as you want. I'm trying to show you all the evidence here, things in the charts that convince me to reverse. Microsoft, second largest component here. Apple's a $2.4 trillion company. This one's a $2.2 trillion company. There you go. Again, common theme. Let's not spend too much time on it. Divergent high, right? And we got the biggest correction. We call it the bulk of it so far, about an 8% drop, biggest correction in many months. And now strong divergences here. And remember, I'm going to wrap this video up, or turn into the weekly charts here in just a second, but that's it. There's another market leading stock with 60-minute divergences. It's not at support, but it took out support. Here's what it did. It took out that 283.73 level, but it's back above it now, and that in itself is near-term bullish. Alphabet took out minor support here, about 26.85, but it recovered it, and it did so. This is Alphabet, GOG, positive divergence. So remember, we have big negative divergence here, and this big divergence, I think probably still will play out for a bigger correction, but we may see, who knows, hard to say right now. Like I said, I'm just trailing stops up, and I'll watch the action as it goes. But I do think this one, like all of them, come down and have another leg down. And again, more of a matter of, we'll know today. If it's all peters out by the time you I get this video out to you, or at the end of the day, just as this rally starts to get some traction, if it gets sold into, if yesterday's lows are taken out, all those things will change the near-term outlook, and probably say we're going to have that last thrust down to my third target on QQQ, and some of these near-term targets here on Alphabet and all these other stocks, and then have a tradable trend where we can reverse and go long for a bounce. So, but like I said, I cannot ignore these divergences. They're gotten quite big right now. And when I say quite big, I mean, again, 60-minute time frame. Here's Amazon. Let me just show you the last two times we had positive divergence was here. This was the last time. I have to grab from over here so I don't move this line. I'm measuring from that low to that high. That was 11.8% rally. From this divergent low back in May, the previous one, you had a rally that was from top to bottom about 21%, so a little over. So 21%, 12%, almost identical divergence right now. And again, so that's it. So it's hard to ignore these divergences, and keep in mind Amazon's also at pretty nice support. It never broke support, 31.71. Facebook, back online, and got clocked pretty hard yesterday with the outage. I think it was down for 6 or 7 hours or something. But look, right to support, positive divergence. There's a downtrend line. So these are very near-term targets, guys. If you're an active trader, we'll probably bounce to those. And if we break it out, then again, just look at all these levels, and I take it collectively. As far as trading the indexes. I find it much easier to jump in and out of NQ, long and short, because it's one trade instead of a handful, and just watch these because they will determine where NQ goes. All right, and Tesla's at resistance right here. Is a big resistance, about 802, but it's held up during this. But remember, Tesla already peaked months ago, actually back in the beginning of 2021, so that one's still well off the highs. Okay, now we're just going to do this the other way. We're going to flip over to weekly chart, look at Apple. Okay, and now bigger picture. Okay, this certainly worth noting. I pointed it out a few weeks ago that we're looking at likely bearish crossovers on the PPO, and that's shown on the histogram here. There's your PPO down there. We had big negative divergences. So all this, everything I've talked about, in addition to market breadth, sentiment, and mainly the technical posture of the market, tells me it's probably a matter of time before we go down and have a much larger correction. To me, it's now micro call. That's what I'm doing this video. It's a matter of what do we do in the near term. Okay, bottom line is Apple. Excuse me there. This is probably the best trend line that I have on Apple. I have one up here, right here off the lows from 2020, March of 2020 when COVID hit. We're below that one, but we're above that, and Apple's above its 200-day moving average, which is the red line here, also the 40-week exponential average. It came in here as support, here as support. So from a technical perspective, you can't write this one off yet. Yeah, it's got big divergences, it had a PPO crossover, but it hasn't really triggered a sell signal, hasn't broken support. Somewhat there, you do have a bearish engulfing candle, and that is a potential topping stick. You can look that term up, bearish engulfing candlestick. You want to see it come after a prolonged uptrend. It engulfed the previous candle right there, the body. You look at the fat part. Fat part needs to cover engulf the body of the previous candle, which it did. And so again, that is, I believe, going to prove to be a major top in Apple. And it's a matter of, does it do this right now or this? So I'm trading this. All right, so there's one that, again, no sell signal right now, still above long-term support, and you can't really chalk this off to anything more than a major, just a minor correction so far. Microsoft, okay, this is important right here. Go to the weekly chart, and these are levels I had for a while. There's the best uptrend line I can draw on Microsoft right now, and we're right on it. Look at that candle. Well, when you zoom on this chart, it moves them around a little bit. I could pick the line up, coming nice and tight there. Any way I slice it or dice it, you have to be solidly below it. So although we had the recent bearish PPO crossover, here's one market-leading stock, second largest one, at support, at major support, trendline support. So, it could bounce here and have another reaction. Now, if that Microsoft dumps this week and puts a solid red close, I just flipped over to Google or Alphabet, then yeah, I'll give it a check mark, a sell signal on the weekly, and certainly want to be short there. But as of now, we're not. Now, Alphabet, here's my trend line. Again, this is the March lows back in 2020. Beautiful trend line on this one. Why I say beautiful? Because more reactions. Look at all these candles. I'm circling all the candles with perfect little touches of this trend line. Now we're below it, but we're barely below it, and enough that should we rally here near term, we're going to close back on or above it. And so what that would be is it would only be, I wouldn't even call it a whipsaw, because it's a weekly candlestick, a weekly chart. This candle is only in progress now, and the week isn't over. So all that matters to me is how we close out on 4 p.m. Friday. So near-term rally is going to get us back up on or close enough to that trend line to say that we're still at support. Do I think this is going to happen? Absolutely. Is it going to happen this week or next? I don't know. Depends what happens today. If these divergences, if we can gain some traction, have a nice green close on the market today, probably bring some buyers in. And again, watch those near-term trend lines and resistance levels that I showed you earlier in the video. Next up, Amazon. Okay, so Amazon, to just kind of recap what I've seen here, it's been trading in a year-long plus trading range. We entered this back in mid 2020, I'm sorry, and just bouncing around like a ping pong ball in that range. Had a breakout here, which proved to be a false breakout. And so just like Apple, I said a minute ago, and I'll say it, I think that's a major top. It was a false breakout. That's bearish right there. You had 1 week. You popped, closed above it. The second week, you traded above it even more and then failed back down in there. And once it failed, like I say, fewer things are more bearish than a false or a failed breakout. So the sellers stepped in hard. The longs got stopped out that took the breakout. And the stock has since got another rejection off the top of the range. So it's back in the trading range. You can put a midpoint line. Midpoint lines often act as support and resistance. But usually once you get rejected off the top of the range, the next stop, whether you trade around for a while, is going to be the bottom of the range. So I think that's where Amazon goes. However, as of now, it's holding that. See that red line? That's the 40-week exponential moving average. It's the midpoint of the range. And so therefore we could bounce, and it might take a while to work down to this primary trend line where I think we're going, the blue one. But again, as of now, looking at this weekly chart, because you can't give it a sell signal yet on the weekly, other than that one. That was a sell signal there, but we already had a nice correction. And again, I'm trying to speak to where we might go in the next few days here, at least at this point in time. Facebook, beautiful bearish rising wedge. This will, I have very little doubt, bring this stock down over time. That is a sell signal all day long. Check, check, check. What I mean by that, 3 red candles after on the break, following the breakdown there. But we're at the 200-day moving average. That's again on a weekly chart, the 40-week moving average. Buyers step in there on tech stocks, especially 1, 2, 3, 4. Look at all these tags of the 40-week, and it held. When you take out the 40-week, it's bearish, and then when you recover it, it's bullish. Support, 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 all back here. All right, so you get the point. So we're testing. We're at support right there. So biggest picture or bigger picture, sell signal. This stock is going lower. Intermediate, this is the first tag of the 40-week, so it could bounce and then take another leg down. All right, so there's Facebook, PPO, bearish crossover, big negative divergence in that wedge. That again tells me, gives me a high degree of confidence this one's coming back down. First to the trend line, long-term targets, then about that 249 target, I'm sorry, and maybe all the way down here to 216, but we're talking months out. Tesla, I just told you a minute ago, major resistance. So there it is. I just finished the weekly charts, and those that have triggered a sell signal, such as Facebook, the most haven't, or at least not the next ones. They have pretty good support. They're coming up on our trend lines that they're at. And those that are already clearly on a sell signal on the weekly charts, like Facebook, is at support. And remember, this thing's dropped 15% to get there. So maybe the buyers step in, think it's a bargain to buy Facebook 15% cheaper than where it was just a month or so ago. Okay, there it is. We'll keep it short and simple. And again, trading, define your time horizon. If you're a longer term trader, swing trader, you might want to sit tight. Just keep your stops where they are based on where you shorted, what your average cost was. If you're an active trader, do what you want. I reversed, and again, I may reverse back short if I see something that convinces me to do so. As of now, like I said, that these divergences are too strong to ignore, and the fact that a lot of some stocks, quite a few, have either hit and bounced off support or taken it out recently but then recovered it, such as this 340, 354, 50-ish level right here on QQQ that now been recovered. That's my reasoning. All right, guys, get the video out to you as quick as I can, and once again, if anything changes or I see anything I missed, I'll do another update, another video, or some static charts by the end of the day. This has been Randy Finney with Right Side of the Chart. Have a great day.